Welcome to Yahoo Finance's special coverage of Nvidia's earnings report. We'll be breaking down the results, getting you inside the earnings call. We're joined by Bob O'Donnell, Technalysis Research President, as well as Yahoo Finance's Brian Sozzi, Dan Halley with us in the newsroom. And we're just a few minutes away from the report, you guys. And in terms of things that we're going to be watching, obviously we're going to be watching Blackwell and see what the revenue is like from that, see what the production is like from that. Obviously, we're going to be watching China. Are they making any changes? Is this new chip coming that we're talking about? We're going to be watching margins. What else? And kind of put some meat on some of that stuff. And
well, I mean, I just think any color that they start to provide in terms of how the deployments are starting to go. I mean, one of the interesting things that I've been watching is they've been making a big push towards enterprise AI factories, meaning selling directly to businesses, right? Becomes a very interesting and obviously big potential opportunity for them, because most of the focus, of course, up till now has been, on the cloud guys. So that's going to be interesting to watch. At some point in time, probably not yet this quarter, software revenues become interesting, right? They've got the Nvidia NIMs, they've got a whole bunch of other software services that they're starting to offer. And again, some of that's going to come in when they start to do these enterprise AI factories through people like Dell, HPE, Cisco, Lenovo, and all the other companies they're working with.
So Brian, when this report hits, you're going to see this rush of data, of numbers hit your screen. What are the data points, the metrics you make a beeline for?
Two things I need to know. I got to get a sense on the gross profit margin. You and I always talk about this, as well as you and me too, Julie. I need to know, I think the street wants to see it accelerating again in the back half of the year into something around the 71 to 72% level. Those margins have been under pressure because of the transition in Blackwell. Also need to know, how is the business in China holding up? What is the long-term outlook there as well? I'm just looking at these HP results, just crossing the wires too. I just got off the phone with HP CEO Enrique Lores. He's telling me that that tariff impact has been severe. So what does Nvidia's results look more like? Do they look like what Salesforce just reported, strong? The company can shake off any tariff concerns? Or do they look like what HP is reporting here and impacted by tariffs?
Yeah, and just to give a little precision around the gross margin issue here, the company's sort of longer-term gross margins are close to that 70% mark. This quarter, a couple of forecasts I saw put it at closer to 58% because of the China issue. And seeing that hit from not being able to have that China revenue. So that's what you might expect around that gross margin number. Let's take it out to Dan Halley in our newsroom, who of course has been really steeped in Nvidia. Hopefully you can still see straight, Dan. What are you going to be really closely focused on here?
Yeah, it's going to be, to me, all about the hyperscalers and how much revenue is generated from them specifically. The Microsofts, the Googles, the Amazons, the Metas. How much of Nvidia's revenue is still fully dependent on them? Last time it was around 50%. We've seen that a few quarters in a row. When are they going to start seeing more revenue from this idea of the sovereign AI, the AI systems that are being put together by countries themselves? We saw those announcements in the Middle East. That's what that kind of investment is, sovereign AI, whether it's Saudi Arabia or the United Arab Emirates. Other countries obviously doing the same thing. But what does that mean then for Nvidia's overall revenue? And how does that wean them off of the dependence, the heavy dependence on those hyperscalers?
Bob, so Dan brings up what's going on in the Middle East, which listen, there is and there should be a ton of focus on the business in China. I am, though, very interested how Jensen Huang frames the opportunity in the Middle East, because you saw him over there, he's there with Trump, he's making deals and announcements, Saudi Arabia, and UAE, how he thinks about the opportunity there, not just now, but over the course of years ahead.
Yeah, no, I think you're right, and I think there is, a lot of hope for that. Look, let's be honest though, there have been previous efforts to drive big tech developments in the Middle East that have been difficult to follow through on because the people, they just don't have the skilled people there that want to stay in that region to do some of the work. So while there's an opportunity, there's that reality check that happens. But Dan brought it up as well. Sovereign AI, to me, is another flavor of, like I said, I talked about enterprise AI. Sovereign AI is all the individual countries developing all this. So beyond the Middle East, there are lots of other places around the world that I think are going to be important. I know we're all going to focus on the China question. And of course, obviously, that's a big deal. But honestly, I think in the long run, it's not going to be quite as big of a deal because, look, they've already said, of course, we're concerned about it. They even threw out a number in terms of what the impact could be. And we'll see what happens. I mean, I think there's a lot of big question marks. Obviously, Jensen's made a lot of comments about whether or not this is a really, good thing, the tariff situation and the restrictions there. And so, I don't know. It's going to be interesting to see. But I think ultimately, yes, Middle East is going to be important to watch.
All right, we have got the numbers now, and the numbers are a miss. This would be the first miss on earnings per share for Nvidia, really the third in the last 6 years or so, 5-6 years. Nvidia adjusted earnings per share at 81 cents, 93 cents was the estimate from analysts here. Overall revenue coming in ahead of estimates, $44.1 billion. The estimate was for $43.3 or so billion. But it looks like data center revenue is a touch shy of estimates here. $39.1 billion, $39.2 billion is what analysts had been anticipating. We were talking about the gross margin number coming out at 61%, which is better than a couple of the estimates I saw here, although I guess the consensus estimate was still at 71%, but a lot of folks have been bringing that down here. The second quarter outlook here, I'm not seeing specific numbers around it yet. Actually, revenue expected to be $45 billion plus or minus 2%. That's the second quarter revenue outlook here. That reflects a loss in H2O revenue of $8 billion. Now, H2O or H20, that is the chip that they sell into China, that they had been selling into China as an alternative to their most advanced chips. Then even that was blocked. And remember, there has been speculation and reporting that they would then come out with an even less advanced chip to try to work around some of the export controls there. Nvidia also saying that global demand for AI infrastructure remains incredibly strong here. So again, it looks like that the company is being hamstrung to some extent by H20, not being able to sell those H20s into China.
So Brian, let's get you in here. So as Julie said, we had some misses, right? Notable misses. This stock's popping 3% in the after hours.
Exactly like we said in the setup to this. Eyes on China. I think a lot of folks that I talked to in the street on Nvidia, they've been unable to quantify really the impact of China. You're going to get a taste of these results. Maybe the impact was more than a lot of people expected. Now, that also fits what we heard from HP, but still, I would even say this too. When was the last time, you just mentioned too, we had Nvidia miss? I mean, this company has only known full-on success going on 5 years. So this is, I would argue, one of the most challenging periods that they have gone through over the past recent years. I'm going to swipe aside the Blackwell rollout, not only challenging operationally, but also potentially now narrative-wise on the street.
Bob, I want to get your thoughts here too. What's also notable is that you could argue this stock was running hot into the print. It was up about 40% from that April low, but you're moving higher in the after hours.
It is. I mean, it is a little tough to figure out because the H20 numbers, the hit is worse, as you suggested, Brian, than some of the numbers that they had already thrown out there. So you do kind of wonder how people are thinking and playing this right now, because we're seeing a big bump, obviously, despite that big China hit. And if it's the data center question, then the question then becomes to what Dan was raising earlier: is, hey, when do we see the breakdown in terms of the hyperscalers versus the enterprise? It could be that the enterprise stuff is still not hitting at all.
Robotics not hitting at all. We've seen Jensen. Jensen has been out there doing a lot of stuff over the past 6 months. He's really hyped up automation, robotics. Now we just saw him come back from Saudi Arabia. Now, these things are not hitting results over 1 quarter. And I think the street may have just gotten too optimistic on all things NVIDIA, and you're likely to see some form of reset
here. How much, Brian, do you think it's this revenue outlook? They're calling for $45 billion plus or minus 2%, and the estimate was 45.5. How much do you think, at least initial reaction here, is all the worries we had, if they're coming that close to consensus and that pleasing the street, at least initially here?
I think the street is concerned about the outlook for China. I cannot stress this enough. And also secondary, if that China business is not going to work well, how is NVIDIA going to, or work at all, I should say, how are they going to get the gross profit margins back up to historical ranges, which is very, very important.
Let me give some more detail and color around the H20 chip that they give in the statement here. So on April 9th is when they learned that they had to get a license for exports of H20 products into China, as they point out. They took a $4.5 billion charge in the first quarter, and then sales were $4.6 billion in the first quarter. Before that, those export requirements came in. They were unable to ship an additional $2.5 billion of H20 revenue in the first quarter as a result of these export controls. So that's sort of giving us a little bit more detail here on what exactly was the case with the China revenue. Yes, you look
Well,
like
yeah,
you
and I want to
to
put a quick
jump
question to
in.
Bob.
Yeah.
I mean, I have like all these thoughts formulating in my head.
Yeah.
This is arguably the second straight disappointing quarter for Nvidia. Question to you, is Nvidia a broken stock here?
No, look, I mean, I don't think so. I think, looking at it from a general industry perspective in terms of you see the commitments that all the Mag 7 folks have been making towards capital. We know, as Brian brought up, at least 50% of NVIDIA's business has been based on those guys. So those are kind of known numbers, and that business is going to continue. So I don't think that breaks the stock. I think what raises questions are these future growth areas, right? Robotics has done obviously nothing from a monetary perspective. Software is still not hit at all. Clearly, none of the enterprise stuff that I was hoping we would see has hit much. And I'm guessing that the sovereign stuff, despite the high profile nature of some of these sovereign deals, like the actual income from them, I think, is limited, especially because a lot of these were early on, they were more MOUs as opposed to actual sales.
And initially, at least some of the response I was seeing was, it's not going to make up for the lost China revenue. Because even, as you say, it's MOUs, that's not revenue coming through the door today.
Right.
Or even tomorrow, or even this year, potentially. These are longer term situations.
No, absolutely. And so are these other opportunities, right? I mean, so, it's a classic case of, are you going to look short term or are you going to look longer term, right? And longer term, the robotics opportunities, I think, are going to be very large. There is a question of how long it's going to take. As we start to get into agentic AI-based things, theoretically that drives more inference-based workloads. That in turn is going to drive more demand. But obviously, look, it's going to give people pause, right? To Brian's point, like, hey, what's going on here? These guys were invincible, or so people thought, and yet perhaps they aren't. Although you'd expect them.
Who's excited about stock futures opening tonight? Raise your hand. This guy right here. Yes, I'm pumped. I mean, I can't believe they missed. This is remarkable.
Yeah, but I'm curious. They missed it. So how do you explain this?
The stock is up.
Yeah.
I have just the guy to ask. Sazi, thank you. Thanks, guys. Thank you for hanging with us. Appreciate it, sir.
Man.
For more on the results, let's welcome in here the man to ask. That would be Cody Cree, Benchmark Company Managing Director, Senior Semiconductor Research Analyst. Cody, it is great to have you on the show. So Nvidia reports, Cody, at least the stock initially in the after hours will pop at about 2 or 3%. What do you make of these results, Cody?
Wow, thanks for having me back. I thought it was a really strong quarter, all things considered. And I think that's really the caveat that we've got to deal with, is that all things considered, given all the issues with China and all of the concerns about slowing of capital budgets, to see the company come in with an $8 billion loss for the Chinese revenue, and still come within a marginal range of estimates, I think is a victory, and I think you're seeing it in the after hours.
And so how do we make sense, though, Cody, of the China business and what the company is saying about it going forward?
Well, I think unfortunately, we don't have clarity yet. We'll get more on the call, but I think that it's going to be a matter of what do they re-architect for China, and how do they manage to deal with Trump's tariffs and the overall AI regulations that are hamstringing the H20 revenue. So I think that Nvidia has done this in the past. They've dealt with it, regulations in the past, and they've overcome. I expect them to do the same again and to be back on track into China in the second half, and that to help drive their gross margins back into that mid 70% range. And I think that's one of the standouts this quarter, is a mid 60% gross margin, much better than the mid 50% margin that I had expected, and hence the earnings beat on the bottom line, 81 cents versus 73, even considering the charge. Without the charge, it was 96 cents versus 73 cents straight. And so I think overall it was a very strong quarter.
So I'm curious, you you talked about the China factor not being, perhaps as big of a concern because obviously it's people they've compensated for it. But what other pieces did you feel like is giving the street confidence based on the reaction that we're seeing? Are there specific elements within other parts of the business that you think really is giving people that confidence to keep the stock moving upward?
I think what you're seeing is just an overall broad adoption of Blackwell. They saw, what was it, data center revenue up 73%, up 10% sequential, and their overall revs up 69%. So obviously led by data center strength, and their Blackwell adoption continues to build momentum. And that really is going to be the key to their future earnings, is going to be the growth of Blackwell and whether or not that is carrying them into the future quarters.
Cody, what about in terms of market share that Nvidia has? And they of course just opened up their ecosystem. That was announced at Computex. Are we going to see how much of these sort of contract chip making is going to start to eat in, or is demand so great that there's enough to go around?
I think it was a brilliant stroke on Jensen's part to open the architecture, to include and embrace the guys like Marvell and AI Chip and others that are making these custom ASIC competitors, frankly, and to embrace them into the NVLink Fusion architecture just means that he gets revenue regardless of who the hyperscalers decide to use. If they do develop and utilize their own tailored solutions, which are optimized for their own tailored workloads, then so be it. Nvidia will benefit from selling them the nuts and bolts and the networking piece of their architecture. It may not sell as many GPUs, but it would not have gotten anything from Marvell's custom ASIC sales. Now they can carry into those custom ASIC revenue trends.
Yeah, I was just going to say, the other thing is they are bringing even more companies involved with this. I happened to have a brief chat last night with Cristiano Amon, who's the CEO of Qualcomm. They were celebrating their 40th anniversary, and they were talking about the fact that they're now getting into this piece as well. So you've got a lot of different players, and I agree with you. I think it was a very smart move. Clearly, we're not going to see the revenues from that for quite some time, but just them opening up their ecosystem a bit more. And they're doing this on the software side as well. They've really been working towards opening up some of their software ecosystem pieces as well. So I think the combination of those things does set them up nicely to deal with some of the obviously competition that's growing all around them.
I think you're exactly right. I think that the opening of the architecture is going to take some time to materialize, but efforts are already underway, and the hyperscalers are already working with NVIDIA's architecture, their CUDA platform, and the broad NVLink systems in their data centers today. And so it just frees them to continue and to benefit from the investment they've already made, and therefore they leverage the best of both worlds, both NVIDIA's GPUs and any tailored custom ASICs that work specifically for their workloads.
Hey, Cody, just to go back, if you can help us with a bit of housekeeping that we are trying to understand here, and you alluded to it earlier. The company reported 81 cents in diluted earnings per share. If you exclude the H20 charge and the taxes related to that, you get to 96 cents a share. When you were estimating earnings, which one were you comping against? Which number is the sort of more relevant number here?
We had 74 cents for the quarter. And so we were estimating gross margins where the bulk of that charge was taken to pressure down into the mid 50% range. Instead, it fell into the 60s. And so it held up much better than we thought. The charge ended up being smaller, 4.5 billion versus their communicated 5.5 billion estimate earlier. So some of that will be taken in the in future periods, I'm sure. But also some of that inventory has probably found a home. There's such strong demand for Nvidia's processors, whether it's the Hopper generation or slimmed down H20 versions, that I'm sure that Jensen is finding room for that extra $1 billion of inventory that wasn't accounted for in this charge.
Yeah. Cody, thank you so much. Interesting stuff as we continue to digest these numbers. Appreciate it.
Thank you.
Let's bring back in Yahoo Finance's Dan Holley for his reaction to the results. So give us your first blush as you've had a chance to go through the numbers, Dan.
Yeah, first blush, I think the coming in at $4.5 billion for the H20 charge is pretty interesting. They said they were able to repurpose some of the materials for those H20 chips. That was a concern that, these aren't kind of chips that you can use for other things, or they can't be replaced in China with other chips from Nvidia, right? So that I think was one of the more interesting aspects of it. Obviously, the kind of adjusted EPS numbers versus the EPS numbers without the charge being different, that was kind of a big take. And then what they're seeing as far as the future in China, there's some headlines going around that they may not be able to compete in China moving forward. So I think those are really the headlines that a lot of people are looking for. That and the $8 billion loss that they're expecting for the Q2 on missed out sales for H20 chips. So I think the company's going to have to do a lot of kind of rejiggering of maybe their lines just to ensure that they can get perhaps another chip out that would be available for China. If not, then figuring out a way to continue to repurpose the chips that they have.
All right, thank you, Dan, and we will be hearing from you throughout the earnings call. Stick around. Much more of Yahoo Finance's special coverage of NVIDIA's earnings that's coming right up as we count down to the earnings call. Well, as chipmaker Nvidia reports mixed first quarter results, let's take a look at how the sector is moving with Yahoo Finance's Josh Schaefer. Josh.
Hey, Josh, yeah, so taking a look at a lot of the stocks that move around NVIDIA's earnings. So NVIDIA, we should mention itself, up about 4% after reporting those first quarter results. Of course, still waiting on the call here. Sometimes that's when some of the other companies sort of related to NVIDIA will move. So we'll take a look at the semi space here. You've got Broadcom up over 1%. And really, that's kind of broadly the moves you're seeing with a lot of these names. You have TSM also up 1.4%. AMD and Nvidia competitor, up 1.4% as well. And then I want to take a look just inside the NASDAQ 100. Of course, we talk about Nvidia. We talk a lot about that Magnificent Seven cohort, right? Those companies that buy chips from Nvidia. So you're seeing the Mag 7 overall up about 0.3%, pretty much across the board. Interesting one to watch will be Tesla. Tesla often moves on Nvidia's report. Tesla's up a little over 1%. And then just looking at sort of how this might be setting us up for the open tomorrow, so how some of these indexes are trading after hours. If you look at the QQQ, which is essentially like the NASDAQ 100, it's the NASDAQ 100 ETF, that is up 0.5%. And then if I can find SPY on my board here, SPY is a S&P 500 ETF, that is currently up 0.25%. Again, a lot of these indexes and the stocks related to Nvidia typically move a little bit more once the earnings call actually starts. But the initial move off this print appears to be higher for a lot of the tech sector.
Josh Schaefer, thank you. Appreciate it. Well, Nvidia reporting better than expected first quarter revenue. Earnings, depending on which metric you look at, missed estimates when including that $4.5 billion charge and related tax impact related to the H20 chip. So if you look at and include the impact of that charge, you get 81 cents a share. If you exclude the charge from H20, you get 96 cents a share. The consensus estimate was 93. The stock is performing as though there was a beat somewhere in there. So let's get a closer look now at the key catalysts for Nvidia and the big tech landscape. Let's bring in Synovus Trust Senior Portfolio Manager Daniel Morgan. Daniel Morgan, it is lovely to see you. Thank you so much for joining us.
Really?
So what do you think of these numbers, as we are seeing this initial reaction and as we await the call?
You know, Julie and Josh, I think you need to be a CPA to interpret these numbers and come up with a picture of exactly what's going on. I mean, I think the things that really stood out is what you guys talked about, which is, I think what the street is doing, they're kind of netting out the H20 charge off, right? It was what, a 4.5 billion inventory charge off. They said on the call or in their notes that they missed out on 2.5 billion in revenue on the first quarter, and on the second quarter they missed out on about 8 billion related to the H20. That would be revenue they could have accrued. You know, they had it ready to ship, but they couldn't do it. So I think maybe that's why the street is reacting the way they are, because obviously the guide going in the second quarter, Josh, was 45 billion. Street was looking for 46.5 billion, so it's a little bit off. But then if we add in that 8 billion, right? Wow, it's it's over 50 billion, right? So again, I think you need to be a CPA to kind of get to these numbers. And that gross margin number too, right? Without the charge, you're at 71%. With it, you're at 61%. So pick your number, right?
Well, Dan, I'm not a CPA, but fortunately I have you to help me try and make sense of all this. I'm wondering, Dan, if I'm an Nvidia investor, I'm listening to this right now, how should I be thinking, Dan, about what that opportunity for this company is in China, not just now, but long term? How would you frame it?
Well, you're right, Josh, and the opportunity is still there. I mean, there's a lot of thought out there that they're going to do a streamlined Blackwell chip, and they're going to sell that into China once they can get it approved, by the Trump administration. Very similar to what they did when they did the scale downs on the H20 and the L40. So I don't think China's off the map, right? I mean, they at one point were getting, 15, 20% of their revenues coming from China. So, but the other thing, Josh and Julie, it's kind of interesting, and just to kind of take a step back from this minutia of this report, think about some of the things that they may have going on, let's say in Saudi Arabia or Middle East. We know that's now been opened up more for trade. There was a big order that came in for 18,000 GPUs that's going to be executed here. So even if China never gets back to the way it was before, I still think that there's long-term opportunities in other parts of the world, like a Saudi Arabia, like the Middle East, because now we're opening up relations with them and we're going to become more involved with them in terms of trade.
Yeah, I was going to follow up with that question myself, and because you're exactly right. I feel like the Middle East is the poster child example of these sovereign deals that I think are possible with them. Yep. And clearly, I guess you're seeing some of these other sovereign opportunities. I had also mentioned earlier about the potential that Jensen started to talk about in the enterprise of companies themselves starting to deploy this. I'm curious for your take on that.
Yeah, I mean, enterprise is big. Josh and Julie, the one thing that we know that's been going on with a lot of the big hyperscalers, for example, is they've been producing their own chips, right? They're still using Nvidia chips, but they're using Broadcom and other avenues in charge in regards to that sector. Then if you look at enterprise, that's also, like you say, Josh, another huge area for them going forward. So, we get really caught up in data center and what's going on there and so forth. Obviously, gaming is another part of their business, but enterprise, sovereigns, all these other areas that could continue to expand for them. It's not just all the hyperscalers and what their CapEx budgets are going to be, right? We've talked about that a bunch of times on the air together. There's more to it as we look at these other avenues of growth for them.
We're looking at some more details here from the filing about the China business here. The company said it may be unable to create a competitive product for China here. It would have to foreclose from competing in the China market. That would materially hit the business here. They do expect to begin shipping the Blackwell Ultra in the second quarter, which is the quarter that we're in right now, fiscal 2026 here. And the company is still evaluating the options to comply with the USG rules. So again, that's coming out from a filing that Nvidia has made alongside its earnings, Dan. And so related to that, I would ask, there has been some reporting that the company is going to be introducing a less advanced chip than H20 to still be able to ship into China. How important is that product? Does it have to really come out with that or risk disappointing the street?
Well, Julie, after everything that's happened so far with this soap opera, right, with the China market, I think at this point, a lot of people would just applaud any chip that would get approved. You mentioned the new one that they disclosed in the notes. I talked about maybe a watered down Blackwell. So anything they can do in China going forward, I think would be construed as a positive. Nvidia is not as focused on China as, let's say, Qualcomm. Qualcomm generates about 50 to 60% of their revenues from China. Applied Materials generates a lot. So does ASM lithography. So, 15, 10% maybe China revenues. So if that was to dwindle down to 5%, like I was mentioning with our conversation earlier with Josh, I just feel like they're going to be able to make it up in networking, sovereigns, Saudi Arabia, these other opportunities. So I think anything out of China at this point would be applauded by the street.
Dan, I have to ask you.
That makes sense.
It does. It does. I want to get a final question here. The competitive landscape, Dan, that Jensen Huang finds himself in, how has it changed, if at all, Dan? I ask you as someone who I think, Dan, you own both Nvidia and AMD, correct?
We own AMD. We also own Broadcom. So that's our kind of play on the AI chips. And Qualcomm.
And how would you characterize the competitive market right now, the competitive landscape for this company, for Nvidia?
Yeah, I still think that, Josh, they're in the post position. AMD, as you know, has come out with their new MI350. They've got an MI400 AI chip that's going to be coming out, and they've backloaded everything in the second half of 25. Intel, Josh, which you've talked a lot about on your show with the Gaudi Falcon Shores, they have a new Panther Lakes. A lot of those chips were discontinued. They have now Panther Lakes coming out next year. So they've been very slow to get to the table. So I would think AMD is probably number two. Marvel's also in there. Broadcom, as you know, guys, they make chips for other companies that they use for their own proprietary uses. They don't produce AI chips directly that compete against NVIDIA like a Blackwell. So, but I still think NVIDIA's got the top position right now. They're still 70, 80% of the market share. So really, until Intel gets it together and AMD can really punch them in the face and Marvell can come up with a little bit more, they're still going to be in the top.
All right, can't fight it. Thanks so much, Dan. Great to see
Julie.
you. Appreciate it. Coming up, we're counting down to NVIDIA's earnings call as CEO Jensen Huang will address investors following those first quarter results. Stick around, much more of Yahoo Finance's special coverage of NVIDIA's earnings report still to come.
Nvidia reporting first quarter earnings just moments ago. And for our chart of the day now, we're taking a look at just how much the broader market depends on the AI giant. Yahoo Finance's Julie Hyman joins us now with a closer look. Julie.
That's right. We have a special Nvidia edition of Chart of the Day. This coming to us via Ryan Grabinski over at Strategas, and he crunched the numbers to figure out exactly how much Nvidia has accounted for the overall earnings power of the S&P 500 over the past few years. We've sliced and diced this kind of stuff all different ways. This is a different flavor for us. So if you look at the total earnings of the S&P 500 and you look at what Nvidia accounts for last quarter, it was 3.9%. So on an individual basis, that is a huge number. And it's also huge considering how much it has increased, like everything else related to Nvidia. It's gone up from about 0.5%, say as recently as 2019, to 3.9% now. So huge weighting, both because of its size and market cap, but also because of the amount of earnings that this company generates here. Now, speaking of its size and market cap, that, of course, is nothing to sneeze at either. Our Josh Schaefer has put out a lot of charts and done a lot of number crunching on this as well. And if you go back to November 2022, Nvidia has accounted for 17% of the gains that we've seen in the S&P 500. Of course, the gains that we've seen have really been powered by the Magnificent Seven overall, but Nvidia single-handedly has accounted for a lot of those gains. And it's not just about sort of looking to the future, looking what may be revenue going forward. It's actual earnings power that has then translated into earnings and then stock gains for Nvidia. Although, as we have been speaking about this year, that path has gotten a lot rockier between the advent of DeepSeek, between these export controls. But obviously, the stock has at least initially been reacting well to the latest earnings that we have gotten. Josh?
Thank you, Julie. Well, Nvidia, like most chip makers, has struggled with geopolitical concerns, tariff policies, and global marketplace risks. Our next guest is a geopolitical strategist who works with businesses and governments to help mitigate risk. Riva Gujan is a director at Rhodium Group. It's a research and advisory firm focusing on global challenges and data analysis. Riva, it is great to see you as always. So let me get your take, Riva, on this Nvidia report, and specifically, Riva, what do you make of what they're telling us about business in China?
Well, they are certainly lamenting declining business in China due to the H-20 ban. As we know, Jensen referred to that as a deeply painful hit, affecting some 15 billion in potential sales of the China market. So obviously, they're not thrilled about that, but it was a long time coming, right? And Nvidia is also trying to use a lot of momentum in the moment from Trump's overhaul of the Biden era AI diffusion rule, which opens up third markets for Nvidia to deploy its GPUs while still closing off China. But they're trying to use that momentum to also push for a broader easing of chip controls on China directly. There are just a lot of reasons why I don't think that latter part is going to happen.
Well, and Riva, Nvidia continues to try to sort of get around these export controls. There's been reporting that it's developing another chip to ship into China, although it did say in a filing today that it might be unable to provide and create that product that would be a competitive one in China. Do you think it does succeed in sort of getting around the rules as it has been?
It's tough. I mean, there is a cat and mouse game between BIS regulators at Commerce on the one hand and Nvidia on the other. Of course, Nvidia is going to be the prime target under scrutiny for the design of any potential controls. And so, you know, with this, the kind of variant of the Blackwell chip for the China market, from what we can tell, right, they have designed it to strip down the memory bandwidth by more than half compared to the original H20. They designed this without any advanced CoWoS, advanced packaging technology. So it's a stripped down chip, and it is going to come at a discount, but this is where you also have Huawei with a competitive edge, offering discounted chips that are also going to be at higher performance.
Riva, you know, President Trump right now does seem to be a fan of Jensen Huang. You saw them in the Middle East together. That's a nice place for Jensen to be. I'm wondering, how you think Jensen Huang maybe could try and capitalize on that relationship, capitalize on that friendship, Riva.
Well, it's a mixed bag, right? There are a number of tech influencers surrounding the president, and he's hearing from all of them. But there are also lines being drawn, and I think the message here for a company like Nvidia and others is focus on the ex-China market for your growth, right? Don't bank on that market for your future. That AI infrastructure build-outs have to happen all around the world. Jensen has taken this message globally of this idea of AI sovereignty, and he wants NVIDIA to be at the epicenter of those build-outs. From a policy perspective, the White House agrees and says, this is the time to lock in those AI infrastructure dependencies so that it's US made and designed chips and US hyperscalers that are leading these build outs globally, but not in China. Right. And so that's the catch here. So whenever you're looking at any one of these tech influencers, there's always going to be some give and take on how far that influence actually goes.
And Riva, speaking of give and take, remind us where you stand in terms of whether these export controls are the right way to go, whether you're balancing effectively driving China to develop its own homegrown industry versus this sort of national security concerns on the U.S. side of shipping these chips in. Kind of where do you come out on that balance?
I mean, there are a lot of folks who will say that, look, it's better to keep Chinese companies dependent on U.S. technology. And so if a company like NVIDIA can offer a more superior chip, then let it sell into this market freely, and that the U.S. can then harness that strategic dependence for the longer term, as Chinese companies would prefer the better product. Now, the counter argument to that is that, look, when it comes to China's tech self-reliance goals, those are already working on steroids at this point, right? Where the directives from the state is to any company in China to say, don't rely on or don't bank your future on access to advanced U.S. technology. Assume that it won't be there and do everything you can to accelerate your production towards self-reliance. And you're seeing some really interesting things from Chinese memory chip makers like CXMT, which is not yet on the BIS entity list, but probably will be soon. But they are really driving toward just advanced memory, HBM, trying to gear toward AI development overall. And so this is really a test of China's industrial policy, of whether it's going to apply lessons learned from previous rounds where there was a lot of waste and corruption, and whether these external factors like US chip controls are going to drive more focus, smarter money flows this time around to yield real breakthroughs. But the U.S. chip controls are a real barrier, and it appears that they're only going to tighten further.
Riva, always good to see you and have you on the show. Thanks so much for your time.
Thank you, Josh.
We are just a few moments away here from NVIDIA's earnings call, and we're now joined by Daniel Newman, Futurum CEO, as well as Bob O'Donnell, Technalysis Research President, and Yahoo Finance's Dan Halley. What a team.
Wow.
Dan's
and a Bob.
Unbelievable. Dan, I will start with you. Very interested to get your take. Give me the Dan Newman take on the NVIDIA results and report. With the stock, I should mention, we're up over 5% here in the after hours.
Yeah, I think while everyone thought we were going to get a beat, there was some people that were bracing for the worst. We knew the China risks were there. We didn't know the write-down ended up being a little bit less than expected. Although I do think the guide actually being lower than what's expected maybe surprised a few people, but you see that $8 billion coming off the top, and that had a big influence. I think we're going to spend the next quarter continuing to have this debate, but between sovereign AI, between the access and opportunities in the Middle East and in other parts of the world to sell, NVIDIA chips, I think the significant opportunities for NVIDIA outweigh the risk. They outweigh some of the concerns, the demand for AI. And here's a couple little other tidbits, Josh. Mm-hmm. They did very well in every other segment. Jensen spent the whole year now so far talking about physical AI, robotics, getting back to autonomy and gaming. All those things performed incredibly well. 72%, I believe, was up on their ADAS and on their vehicle business. That hadn't even been talked about for a few quarters. And networking, by the way, saved the day. It actually covered the gap and allowed the data center business to beat. So you have to feel good about where it stands. We had a really good run of earnings from all the other Mag 7 companies, almost all. Tesla was a little spotty. And so we were setting this up to go well. But if it went anything but really well, the whole market would have fallen. You can see the market's happy with the result.
Well, and it's interesting that even when things go really well, that's no guarantee that the shares will go up, as we have seen in the past, most definitely. Dan Halley, give us your final thoughts before we get to the call in a few minutes here.
Yeah, I think as Dan pointed out, that $4.5 billion charge coming in lower than the 5.5 that was expected. Just the ability for Nvidia to, as I said before, repurpose parts of those chips is incredibly important. And looking forward, we'll have to see if they're able to do that with existing inventory. Or, they mentioned that they're expecting to miss out on about $8 billion in sales of H20s due to that ban in Q2. So what that means now going forward, I think will be important. And how they're repurposing those chips will also be something to look out for. And then gaming did surprisingly well. That's just tangential to this kind of, it feels like at this point, but it beat on expectations and jumped pretty high. So an interesting move on that part.
All right, Bob, so you're now a financial analyst. You're on the call. You have an opportunity to ask Jensen himself a couple questions, 2 or 3. What's top of mind?
Well, I'm going to go back to some of the things I brought up earlier. I want to know when he expects to see the enterprise AI stuff hit. I want to hear more about, Dan brought up autonomy on the automotive side, but obviously the robotics thing is the big question. So when do those things start to hit? When do we start to see more software revenues start to hit from all the work that they've been doing there? I still feel like those are the long-term benefits that NVIDIA has, and so those would be the things I would ask.
All right, and let's go to the call now. Colette Kress, the CFO, Chief Financial Officer of NVIDIA, is speaking now. Let's listen in.
Although our H20 has been in the market for over a year and does not have a market outside of China, the new export controls on H20 did not provide a grace period to allow us to sell through our inventory. In Q1, we recognized $4.6 billion in H20 revenue, which occurred prior to April 9th, but also recognized a $4.5 billion charge as we wrote down inventory and purchase obligations tied to orders we had received prior to April 9th. We were unable to ship $2.5 billion in H20 revenue in the first quarter due to the new export controls. The $4.5 billion charge was less than what we initially anticipated, as we were able to reuse certain materials. We are still evaluating our limited options to supply data center compute products compliant with the US government's revised export control rules. Losing access to the China AI accelerator market, which we believe will grow to nearly $50 billion, would have a material adverse impact on our business going forward and benefit our foreign competitors in China and worldwide. Our Blackwell ramp, the fastest in our company's history, drove a 73% year-on-year increase in data center revenue. Blackwell contributed nearly 70% of data center compute revenue in the quarter, with a transition from Hopper nearly complete. The introduction of GB200 NVL was a fundamental architectural change to enable data center scale workloads and to achieve the lowest cost per inference token. While these systems are complex to build, we have seen a significant improvement in manufacturing yields, and rack shipments are moving to strong rates to end customers. GB200 NVL racks are now generally available for model builders, enterprises, and sovereign customers to develop and deploy AI. On average, major hyperscalers are each deploying nearly 1,000 NVL 72 racks, or 72,000 Blackwell GPUs per week, and are on track to further ramp output this quarter. Microsoft, for example, has already deployed tens of thousands of Blackwell GPUs and is expected to ramp to hundreds of thousands of GB200s, with OpenAI as one of its key customers. Key learnings from the GB200 ramp will allow for a smooth transition to the next phase of our product roadmap, Blackwell Ultra. Sampling of GB300 systems began earlier this month at the major CSPs, and we expect production shipments to commerce later this quarter. GB300 will leverage the same architecture, same physical footprint, and the same electrical and mechanical specifications as GB200. The GB300 drop-in design will allow CSPs to seamlessly transition their systems and manufacturing used for GB200 while maintaining high yields. B300 GPUs with 50% more HBM will deliver another 50% increase in dense FP4 inference compute performance compared to the B200. We remain committed to our annual product cadence, with our roadmap extending through 2028, tightly aligned with the multiple year planning cycles of our customers. We are witnessing a sharp jump in inference demand. OpenAI, Microsoft, and Google are seeing a step function leap in token generation. Microsoft processed over 100 trillion tokens in Q1, a 5-fold increase on a year-over-year basis. This exponential growth in Azure OpenAI is representative of strong demand for Azure AI Foundry, as well as other AI services across Microsoft's platform. Inference serving startups are now serving models using B200, tripling their token generation rate and corresponding revenues for high-value reasoning models such as DeepSeek R1, as reported by Artificial Analysis. Nvidia Dynamo on Blackwell NVL72 turbocharges AI inference throughput by 30x for the new reasoning models sweeping the industry. Developer engagements increased, with adoption ranging from LLM providers such as Perplexity to financial services institutions such as Capital One, who reduced agentic chatbot latency by 5x with Dynamo. In the latest MLPerf inference results, we submitted our first results using GB200 NVL72, delivering up to 30x higher inference throughput compared to our 8 GPU H200 submission on the challenging Llama 3.1 benchmark. This feat was achieved through a combination of tripling the performance per GPU as well as 9x more GPUs, all connected on a single NVLink domain. And while Blackwell is still early in its life cycle, software optimizations have already improved its performance by 1.5x in the last month alone. We expect to continue improving the performance of Blackwell through its operational life, as we have done with Hopper and Ampere. For example, we increased the inference performance of Hopper by 4 times over 2 years. This is the benefit of NVIDIA's programmable CUDA architecture and rich ecosystem. The pace and scale of AI factory deployments are accelerating, with nearly 100 NVIDIA-powered AI factories in flight this quarter, a 2-fold increase year over year, with the average number of GPUs powering each factory also doubling in the same period. And more AI factory projects are starting across industries and geographies. NVIDIA's full-stack architecture is underpinning AI factory deployments as industry leaders like AT&T, BYD, Capital One, Foxconn, MediaTek, and Telenor are strategically vital sovereign clouds like those recently announced in Saudi Arabia, Taiwan, and the UAE. We have a line of sight to projects requiring tens of gigawatts of NVIDIA AI infrastructure in the not-too-distant future. The transition from generative to agentic AI capable of perceiving, reasoning, planning, and acting, will transform every industry, every company, and country. We envision AI agents as a new digital workforce capable of handling tasks ranging from customer service to complex decision-making processes. We introduced the Llama Nemotron family of open reasoning models designed to supercharge agentic AI platforms for enterprises. Built on the Llama architecture, these models are available as NIMs or NVIDIA inference microservices with multiple sizes to meet diverse deployment needs. Our post-training enhancements have yielded a 20% accuracy boost and a 5x increase in inference speed. Leading platform companies, including Accenture, Cadence, Deloitte, and Microsoft, are transforming work with our reasoning models. NVIDIA NeMo microservices are generally available across industries and are being leveraged by leading enterprises to build, optimize, and scale AI applications. With NeMo, Cisco increased model accuracy by 40% and improved response time by 10x in its code assistant. NASDAQ realized a 30% improvement in accuracy and response time in its AI platform's search capabilities. And Shell's custom LLM achieved a 30% increase in accuracy when trained with NVIDIA NeMo. NeMo's parallelism techniques accelerated model training time by 20% when compared to other frameworks. We also announced a partnership with Yum Brands, the world's largest restaurant company, to bring NVIDIA AI to 500 of its restaurants this year and expanding to 61,000 restaurants over time to streamline order taking, optimize operations, and enhance service across its restaurants. For AI-powered cybersecurity, leading companies like Checkpoint, CloudStrike, and Palo Alto Networks are using NVIDIA's AI security and software stack to build, optimize, and secure agentic workflows, with CloudStrike realizing 2x faster detection triage with 50% less compute cost. Moving to networking, sequential growth in networking resumed in Q1 with revenue up 64% quarter over quarter to $5 billion. Our customers continue to leverage our platform to efficiently scale up and scale out AI factory workloads. We created the world's fastest switch, NVLink. For scale up, our NVLink compute fabric in its 5th generation offers 14x the bandwidth of PCIe Gen 5. NVLink 72 carries 130 terabytes per second of bandwidth in a single rack, equivalent to the entirety of the world's peak internet traffic. NVLink is a new growth vector and is off to a great start, with Q1 shipments exceeding $1 billion. At Computex, we announced NVLink Fusion. Hyperscale customers can now build semi-custom CCUs and accelerators that connect directly to the NVIDIA platform with NVLink. We are now enabling key partners, including ASIC providers such as MediaTek, Marvell, Alchip Technologies, and Astera Labs, as well as CPU suppliers such as Fujitsu and Qualcomm, to leverage NVLink Fusion to connect our respective ecosystems. For scale out, our enhanced Ethernet offerings deliver the highest throughput, lowest latency networking for AI. Spectrum X posted strong sequential and year-on-year growth and is now annualizing over $8 billion in revenue. Adoption is widespread across major CSPs and consumer internet companies, including CoreWeave, Microsoft Azure, Oracle Cloud, and xAI. This quarter, we added Google Cloud and Meta to the growing list of Spectrum X customers. We introduced Spectrum X and Quantum X silicon photonics switches featuring the world's most advanced co-packaged optics. These platforms will enable next-level AI factory scaling to millions of GPUs through the increasingly power efficiency by 3.5x and network resiliency by 10x, while accelerating customer time to market by 1.3x. Transitioning to a quick summary of our revenue by geography. China, as a percentage of our data center revenue, was slightly below our expectations and down sequentially due to H20 export licensing controls. For Q2, we expect a meaningful decrease in China data center revenue. As a reminder, while Singapore represented nearly 20% of our Q1 billed revenue, as many of our large customers use Singapore for centralized invoicing, our products are almost always shipped elsewhere. Note that over 99% of H100, H200, and Blackwell data center compute revenue billed to Singapore was for orders from US-based customers. Moving to gaming and AI PCs. Gaming revenue was a record $3.8 billion, increasing 48% sequentially and 42% year on year. Strong adoption by gamers, creatives, and AI enthusiasts have made Blackwell our fastest ramp ever. Against a backdrop of robust demand, we greatly improved our supply and availability in Q1 and expect to continue these efforts in Q2. AI is transforming PC and creator and gamers. With a 100 million user installed base, GeForce represents the largest footprint for PC developers. This quarter, we added to our AI PC laptop offerings, including models capable of running Microsoft's Copilot+. This past quarter, we brought Blackwell architecture to mainstream gaming with its launch of GeForce RTX 5060 and 5060 Ti, starting at just $299. The RTX 5060 also debuted in laptops starting at $1,099. These systems that double the frame rate and slash latency. These GeForce RTX 5060 and 5060 Ti desktop GPUs and laptops are now available. In console gaming, the recently unveiled Nintendo Switch 2 leverages NVIDIA's neural rendering and AI technologies, including next-generation custom RTX GPUs with DLSS technology, to deliver a giant leap in gaming performance to millions of players worldwide. Nintendo has shipped over 150 million Switch consoles to date, making it one of the most successful gaming systems in history. Moving to pro visualization, revenue of $509 million was flat sequentially and up 19% year on year. Tariff-related uncertainty temporarily impacted Q1 systems, and demand for our AI workstations is strong, and we expect sequential revenue growth to resume in Q2. NVIDIA DGX Spark and Station revolutionize personal computing by putting the power of an AI supercomputer in a desktop form factor. DGX Spark delivers up to 1 petaflop of AI compute, while DGX Station offers an incredible 20 petaflops and is powered by the GB300 superchip. DGX Spark will be available in calendar Q3 and DGX Station later this year. We have deepened Omniverse's integration and adoption into some of the world's leading software platforms, including Databricks, SAP, and Schneider Electric. New Omniverse blueprints, such as Mega for at-scale robotic fleet management, are being leveraged in Kion Group, Pegatron, Accenture, and other leading companies to enhance industrial operations. At Computex, we showcased Omniverse's great traction with technology manufacturing leaders, including TSMC, Quanta, Foxconn, Pegatron. Using Omniverse, TSMC saves months in work by designing fabs virtually. Foxconn accelerates thermal simulations by 150x, and Pegatron reduced assembly line defects rates by 67%. Lastly, with our automotive group, revenue was $567 million, down 1% sequentially, but up 72% year on year. Year on year growth was driven by the ramp of self-driving across a number of customers and robust end demand for NEVs. We are partnering with GM to build the next gen vehicles, factories, and robots using NVIDIA AI, simulation, and accelerated computing. And we are now in production with our full stack solution for Mercedes-Benz, starting with the new CLA, hitting roads in the next few months. We announced Isaac GR00T N1, the world's first open, fully customizable foundation model for humanoid robots, enabling generalized reasoning and skill development. We also launched new open Nvidia Cosmo World Foundation models. Leading companies include 1X, Agility Robotics, Figure AI, Uber, and Wabi. We've begun integrating Cosmos into their operations for synthetic data generation, while Agility Robotics, Boston Dynamics, and XPen Robotics are harnessing Isaac simulation to advance their humanoid efforts. GE Healthcare is using the new NVIDIA Isaac platform for healthcare simulation, built on NVIDIA Omniverse and using NVIDIA Cosmos. The platform speeds development of robotic imaging and surgery systems. The era of robotics is here. Billions of robots, hundreds of millions of autonomous vehicles, and hundreds of thousands of robotic factories and warehouses will be developed. All right, moving to the rest of the P&L. GAAP gross margins and non-GAAP gross margins were 60.5% and 61% respectively. Excluding the $4.5 billion charge, Q1 non-GAAP gross margins would have been 71.3, slightly above our outlook at the beginning of the quarter. Sequentially, GAAP operating expenses were up 7% and non-GAAP operating expenses were up 6%, reflecting higher compensation and employee growth. Our investments include expanding our infrastructure capabilities and AI solutions, and we plan to grow these investments throughout the fiscal year. In Q1, we returned a record $14.3 billion to shareholders in the form of share repurchases and cash dividends. Our capital return program continues to be a key element of our capital allocation strategy. Let me turn to the outlook for the second quarter. Total revenue is expected to be $45 billion, plus or minus 2%. We expect modest sequential growth across all of our platforms. In data center, we anticipate the continued ramp of Blackwell to be partially offset by a decline in China revenue. Note, our outlook reflects a loss in H20 revenue of approximately $8 billion for the second quarter. GAAP and non-GAAP gross margins are expected to be 71.8% and 72% respectively, plus or minus 50 basis points. We expect better Blackwell profitability to drive modest sequential improvement in gross margins. We are continuing to work towards achieving gross margins in the mid-70s range late this year. GAAP and non-GAAP operating expenses are expected to be approximately $5.7 billion and $4 billion, respectively, and we continue to expect full-year fiscal year 26 operating expense growth to be in the mid-30% range. GAAP and non-GAAP other income and expenses are expected to be an income of approximately $450 million, excluding gains and losses from non-marketable and publicly held equity securities. GAAP and non-GAAP tax rates are expected to be 16.5%, plus or minus 1%, excluding any discrete items. Further financial details are included in the CFO commentary and other information available on our IR website, including a new financially information AI agent. Let me highlight upcoming events for the financial community. We will be at the BofA Global Technology Conference in San Francisco on June 4th, the Rosenblatt Virtual AI Summit and NASDAQ Investor Conference in London on June 10th, and GTC Paris at VivaTech on June 11th in Paris. We look forward to seeing you at these events. Our earnings call to discuss the results of our second quarter of fiscal 2026 is scheduled for August 27. Well, now let me turn it over to Jensen to make some remarks.
Thanks, Colette. We've had a busy and productive year. Let me share my perspective on some topics we're frequently asked. On export control, China is one of the world's largest AI markets and a springboard to global success. With half of the world's AI researchers based there, the platform that wins China is positioned to lead globally. Today, however, the $50 billion China market is effectively closed to US industry. The H20 export ban ended our Hopper data center business in China. We cannot reduce Hopper further to comply. As a result, we are taking a multi-billion dollar write-off on inventory that cannot be sold or repurposed. We are exploring limited ways to compete, but Hopper is no longer an option. China's AI moves on with or without US chips. It has the compute to train and deploy advanced models. The question is not whether China will have AI. It already does. The question is whether one of the world's largest AI markets will run on American platforms. Shielding Chinese chip makers from US competition only strengthens them abroad and weakens America's position. Export restrictions have spurred China's innovation and scale. The AI race is not just about chips. It's about which stack the world runs on. As that stack grows to include 6G and quantum, US global infrastructure leadership is at stake. The US has based its policy on the assumption that China cannot make AI chips. That assumption was always questionable, and now it's clearly wrong. China has enormous manufacturing capability. In the end, the platform that wins the AI developers wins AI. Export controls should strengthen US platforms, not drive half of the world's AI talent to rivals. On DeepSeek and QN from China are among the best open source AI models. Released freely, they've gained traction across the US, Europe, and beyond. DeepSeek R1, like ChatGPT, introduced reasoning AI that produces better answers the longer it thinks. Reasoning AI enables step-by-step problem solving, planning, and tool use, turning models into intelligent agents. Reasoning is compute intensive, requires hundreds to thousands of times more tokens per task than previous one-shot inference. Reasoning models are driving a step function surge in inference demand. AI scaling laws remain firmly intact, not only for training, but now inference too requires massive scale compute. DeepSeek also underscores the strategic value of open source AI. When popular models are trained and optimized on US platforms, it drives usage, feedback, and continuous improvement, reinforcing American leadership across the stack. US platforms must remain the preferred platform for open source AI. That means supporting collaboration with top developers globally, including in China. America wins when models like DeepSeek and QN runs best on American infrastructure. Regarding onshore manufacturing, President Trump has outlined a bold vision to reshore advanced manufacturing, create jobs, and strengthen national security. Future plants will be highly computerized and robotics. We share this vision. TSMC is building 6 fabs and 2 advanced packaging plants in Arizona to make chips for Nvidia. Process qualification is underway, with volume production expected by year end. SPIL and Amkor are also investing in Arizona, constructing packaging, assembly, and test facilities. In Houston, we're partnering with Foxconn to construct a 1 million square foot factory to build AI supercomputers. Wistron is building a similar plant in Fort Worth, Texas. To encourage and support these investments, we've made substantial long-term purchase commitments, a deep investment in America's AI manufacturing future. Our goal, from chip to supercomputer, built in America within a year. Each GB200 NVLink 72 racks contains 1.2 million components and weighs nearly 2 tons. No one has produced supercomputers on this scale. Our partners are doing it an extraordinary job. On AI diffusion rule, President Trump rescinded the AI diffusion rule, calling it counterproductive, and proposed a new policy to promote US AI tech with trusted partners. On his Middle East tour, he announced historic investments. I was honored to join him in announcing a 500 megawatt AI infrastructure project in Saudi Arabia and a 5 gigawatt AI campus in the UAE. President Trump wants US tech to lead. The deals he announced are wins for America, creating jobs, advancing infrastructure, generating tax revenue, and reducing the US trade deficit. The US will always be NVIDIA's largest market and home to the largest installed base of our infrastructure. Every nation now sees AI as core to the next industrial revolution, a new industry that produces intelligence and essential infrastructure for every economy. Countries are racing to build national AI platforms to elevate their digital capabilities. At Computex, we announced Taiwan's first AI factory in partnership with Foxconn and the Taiwan government. Last week, I was in Sweden to launch its first national AI infrastructure. Japan, Korea, India, Canada, France, the UK, Germany, Italy, Spain, and more are now building national AI factories to empower startups, industries, and societies. Sovereign AI is a new growth engine for NVIDIA. Toshiya, back to you. Thank you.
Operator, we will now open the call for questions. Would you please poll for questions?
Thank you. At this time, I would like to remind everyone, in order to ask a question, press star, then the number 1 on your telephone keypad. We'll pause for just a moment to compile the Q&A roster. Your first question comes from the line of Joe Moore with Morgan Stanley. Your line is open.
Great, thank you. You guys have talked about this scaling up of inference around reasoning models for at least a year now, and we've really seen that come to fruition as you talked about. We've heard it from your customers. Can you give us a sense for how much of that demand you're able to serve, and give us a sense for maybe how big the inference business is for you guys, and do we need full on NVL72 rack scale solutions for reasoning inference going forward?
Well, we would like to serve all of it, and I think we're on track to serve most of it. Grace Blackwell NVLink 72 is the ideal engine today, the ideal computer thinking machine, if you will, for reasoning AI. There's a couple of reasons for that. The first reason is that the token generation amount, the number of tokens reasoning goes through, is 100, 1,000 times more than a one-shot chatbot. It's essentially thinking to itself, breaking down a problem step by step. It might be planning multiple paths to an answer. It could be using tools, reading PDFs, reading web pages, watching videos, and then producing a result, an answer. The longer it thinks, the better the answer, the smarter the answer is. And so what we would like to do, and the reason why Grace Blackwell was designed to give such a giant step up in inference performance, is so that you could do all this and still get a response as quickly as possible. Compared to Hopper, Grace Blackwell is some 40 times higher speed and throughput compared. And so this is going to be a huge, huge benefit in driving down the cost while improving the quality of response with excellent quality of service at the same time. And so that's the fundamental reason. That was the core driving reason for Grace Blackwell NVLink 72. Of course, in order to do that, we had to reinvent, literally redesign the entire way that these supercomputers are built. But now we're in full production. It's going to be exciting. It's going to be incredibly exciting.
The next question comes from Vivek Arya with Bank of America Securities. Your line is open.
Thanks for the question. Just a clarification for Colette first. So on the China impact, I think previously it was mentioned at about $15 billion. So you had the $8 billion in Q2. So is there still some left as a headwind for the remaining quarters? Just Colette, how to model that. And then question, Jensen, for you. Back at GTC, you had outlined a path towards almost $1 trillion of AI spending over the next few years. Where are we in that build out? And do you think it's going to be uniform, that you will see every spender, whether it's CSP, sovereigns, enterprises, or build out? Should we expect some periods of digestion in between? Just what are your customer discussions telling you about how to model growth for next year?
Yes, Vivek. Thanks so much for the question regarding H20. Yes, we recognized 4.6 H20 in Q1. We were unable to ship 2.5 billion, so the total for Q1 should have been 7 billion. When we look at our Q2 is going to be meaningfully down in terms of China data center revenue. And we had highlighted in terms of the amount of orders that we had planned for H20 in Q2. And that was 8 billion. Now, going forward, we did have other orders going forward that we will not be able to fulfill. That is what was incorporated, therefore, in the amount that we wrote down of the $4.5 billion. That write down was about inventory and purchase commitments. And our purchase commitments were about what we expected regarding the orders that we had received. Going forward, though, it's a bigger issue regarding the amount of the market that we will not be able to serve. We assess that TAM to be close to about 50 billion in the future, as we don't have a product to enable for the China.
We've been listening in to NVIDIA's conference call. Let's recap NVIDIA's numbers now. The company reported solid earnings after the bell. Revenue rising 69% from a year earlier to $44.1 billion. That's ahead of analyst estimates on average. NVIDIA did take a smaller than forecast $4.5 billion write-down related to increased restrictions of sales of its chips into China, including that charge. Earnings per share coming in at 81 cents. That also beat comparable estimates. Sales in the current quarter will amount to $45 billion, plus or minus 2%. That's roughly in line with most analyst estimates. And that does include the loss of $8 billion in revenue from sales of those H20 chips, which it had been selling into China. And Jensen Huang talking about that Chinese market for AI being around $50 billion and highlighting the disadvantage that he believes not only the company is now put at because of these export controls, but that the industry more broadly is facing as a result of that as well. So those are the numbers, Josh. Seeing a positive reaction, obviously, in the after hours to those.
Yeah, I'm just seeing this post by Gene Munster here, who's a tech analyst that everybody on the panel knows. Munster is making the case that he thinks the stock should be trading higher than it is here, than 4%. The reason he says that, if you back out the impact of the curbs, he says year-over-year revenue growth in April would have been 79%, and the guide for July would have been 76%. Latest evidence, he says the company's growth will be higher for longer.
All right, let's bring our panel back in. We've got Bob O'Donnell of Technalysis. We've got Dan Newman here as well. So guys, really hearing a couple things on that call. Really the emphasis that we've been hearing now kind of since the beginning of this latest wave of NVIDIA. We can do inference, we can do inference, we can do inference. Can you guys do inference? Did you mention you could do inference? So they're really emphasizing that their chips are well suited for this current stage of where we are in AI. And then, of course, the message from Jensen Huang himself that export controls are a bad deal for everyone concerned, he seems to think.
Yeah.
Bob?
Well, and the other theme he brought up, of course, was theme we've heard a lot before, which is sovereign AI, right?
Yes.
And doing sovereign AI wherever we can. So look, I mean,
and sovereign AI just means countries doing AI for themselves.
Literally, that's all it means. It's a very fancy sounding
like
way
governments doing
AI.
Exactly.
But look, I mean, I think all the positive points of opportunity for growth are still there. I found it very interesting, actually, that all the customer examples they talked about actually were enterprises. Remember, which is something I'm like, even though the absolute numbers I think are still small for enterprise, those were the examples they gave. They also actually gave a number of examples around robotics, which we also know is like basically just about zero revenue yet. So I think clearly the company is trying to tell the story beyond obviously that, yes, we can do inference and that we need to be in China. Hello, President Trump, you're listening. We need to be in China. You're cutting us off from $50 billion. Please don't do that. Then it's like, and here are the other growth opportunities. So I think they're trying to set the stage and tell the story around where those growth opportunities are by focusing on some examples, from those different sectors.
Dan, I'm interested to get your take, and we were chewing over this earlier about the opportunity in the Middle East. And I wanted to get your sense of, is it possible one reason investors got so excited when they saw Jensen Huang over there and he's making these deals in Saudi Arabia and the UAE? Because did it potentially address one issue that the Nvidia skeptics on this show have brought forward? And you'll hear this, they'll say, well, maybe 2025 is really the high watermark in AI spend. This is peak AI spend. And maybe folks looked at the Middle East and said, well, or maybe there's some really deep-pocketed folks who can keep this party going.
Yeah, the AI bubble folks, the ones that said the party's already over, are entirely wrong. And they're going to continue.
Why do you say that, Dan?
Because we're just in the early stages. When you actually listen to what Bob was just talking about, the enterprise build out, the consumption, we're actually in the very earliest stages. The consumption, the inference opportunity, the reason Jensen's so focused on it is because the trillions of tokens that will be concurrently used to do agentic or to do humanoids, we haven't even started that. And that's what's going to really create this need for A, power, and B, more infrastructure. I want to take a quick step back, though, and talk about China, because the Middle East actually proved an important point. And it's that the US is actually on board for AI diffusion around the world and wants US and Western AI to win everywhere, including in complicated regions like the Middle East. China's a different animal. And I think it's interesting because Jensen is saying all the right things for Nvidia. But for the US, I don't know that he's saying the right things. And I don't believe, and on the record, I do not believe that China's resolve and China's commitment to building a competitive product has anything to do with whether or not we sell Nvidia into that market. And remember, Chinese is run by the Communist Party. Chinese puts its own national interests first. So even if Nvidia and its stack and its superior software, CUDA, is everywhere in China, at any point, Xi Jinping can say, no more Nvidia, you are going to switch to CAN, their version of CUDA. And that could happen. Right now, they're doing it with the Ascend chips. The Ascend chips they are much less capable than even the older Hopper chips. And that's the reason they still want them. But they are putting them together. They are building 2 coal-fired plants per week. They are building an energy capacity to be able to deliver on AI. And they understand the next multiple decades of economic leadership are going to sit on winning AI. They're not standing back. They're not sitting idly. But if I'm an Nvidia investor, if I'm a shareholder, or if I'm Jensen, he's saying the exact right things. But if I'm President Trump, I'm still listening to counsel from different sides because China's resolve is substantial, it's absolute, and they have no interest in standing by idly and letting the U.S. just have AI.
Yeah, no, I completely agree. I mean, the challenge is going to be that China is getting a lot better, right? And those Huawei chips that you're talking about, the Ascend chips, I mean, they are slowly but surely getting better. But just today there was an announcement I saw that Cadence and Synopsys, the big EDA companies, companies who create the software for designing advanced chips, just got whacked, basically, and told, sorry, you can't sell that into China either. So there's a lot of efforts there. I mean, I do find it interesting that, in essence, we've heard a couple people throughout the program basically say, hey, we're starting to model NVIDIA without China, basically, right? And they're saying, hey, what does the world look like if we do that? And then, obviously, anything that get into China is just gravy, up, above and beyond that. And so I think we'll probably see some people probably follow that route for a while, and then I think we'll see other people, take different approaches. But it's a big question that it's gonna take a while to figure out, and you can make strong arguments on both sides of this.
Remember the stakes, Josh, at play are this trade deal. This trade deal is still out there. The Synopsys, Cadence, Siemens, EDA block, anything to slow down. Now again, protectionism, I would actually go on and say, I do not believe the long-term strategy is to focus on protectionism. But right now, you would have to say, well, if we're not focused on that, then why don't we just give them ASML too? Why don't we give them EUV and advanced lithography and everything else? There's a reason this was done by the Democrats. There's a reason this is being continued by the Republicans. In the end, the US has to win. I think it's a balance of protectionism and then therefore diffuse our AI everywhere else in the meantime.
Yeah. Well, guys, let's bring in another voice here, an important voice, and that, of course, would be Yahoo Finance's Dan Howley for his reaction to the call. Dan, give us your highlights.
Yeah, I want to talk about some things that CFO Colette Kress had pointed out. We have some audio from her going over what she sees as the inferencing explosion.
We are witnessing a sharp jump in inference demand. OpenAI, Microsoft, and Google are seeing a step function leap in token generation. Microsoft processed over 100 trillion tokens in Q1.
So was another kind of bit that she pointed out when it comes to the future projects that Nvidia is working on.
We have a line of sight to projects requiring tens of gigawatts of Nvidia AI infrastructure in the not too distant future.
And, there was more to that, obviously, but then we had CEO Jensen Huang going over kind of the idea that they won't be able to use Hopper moving forward, and then what that means for the Chinese market and the potential for the U.S. to miss out on it.
China is one of the world's largest AI markets and a springboard to global success. With half of the world's AI researchers based there, the platform that wins China is positioned to lead globally.
So this is obviously, basically the sharpest pushback we've seen from Jensen Huang with regards to these export controls. Now he's criticized these before, especially at GTC, things like that. He said that essentially export controls are a failure and that there should be other ways to work around this. But him saying directly, look, we're basically giving China this ability to build out its own AI infrastructure rather than having them rely on U.S. AI infrastructure is a negative for not just NVIDIA, but the U.S. as a whole.
All right, Dan. Okay, sorry, I wasn't sure if we were going back to Dan. Didn't know what we were doing there, but we're all here still talking about the same stuff. So one of the other things I want to ask about, and this is something we haven't really talked directly about as they sort of try to highlight the enterprise AI. I was struck by a column that I read from a Bloomberg columnist earlier this week. She was talking about the collapse of Builder AI, which is a UK company that was trying to give sort of building blocks to companies that didn't have the capability to do AI on their own. And it turned out maybe they weren't really doing what they said they were doing. And we've seen this popping up on a couple of occasions within AI where there are people on the other end of the line. It's not really the AI doing the work, it's people doing the work. Yeah. And so I know, Dan, you think we're super early, there's lots of exciting stuff to come. I just wonder, how much of that we're going to continue to see and what kind of fits and starts the whole AI cycle is going to continue to see.
If we're not early, we have a big problem because we've built these ghost cities and the consumption of this infrastructure is still very small. We're building for the long term, the future. We're building these massive megawatt, facilities, and we have to build nuclear. It's going to take a decade. We have to figure out a way to power all these things. Now, going back to Builder, look, I think a lot of companies, Klarna is another great example. They kind of told a story, we're going to do everything with AI, and you kind of hear them pulling that back. You hear, Salesforce reported today, had a good result, 60% of their big projects he mentioned were AI powered, agent force powered. But having said that, he wanted to hire 2,000 salespeople to sell agents. So there's a little bit of hypocrisy in this whole thing that, well, if these agents are so capable, why wouldn't you put your agents to work? Because there is still this augmentation layer. And I think in the earliest innings of AI, we're going to see humans augmented by agents. Over time, we are going to see those lower end. Just yesterday, David Solomon, I believe it was yesterday, last week, he put a quote out talking about the S1 filings at Goldman Sachs. He said that, this used to take many weeks and a large team. Now 95% of that work can be done with generative AI and tools, leaving the 5%. So where we are heading is a world where these tools are going to augment, they are going to displace. We haven't figured out exactly how to tell that story to the world.
Right, well, and the CEO of Anthropic saying 5 to 10% of entry-level white-collar jobs will be gone as a result of all of this.
And I think that estimate, 5 to 10%, could eventually be only 5 to 10% will be left. I think that's where it is heading. This stuff's incredibly powerful, and we're in this business.
Yeah, well, I mean, the thing to also to bear in mind in all of this stuff is the fact that all of us, and I would, just ask each one of us, how much are we actually using that AI today? We're all using it somewhat, but have we really fully integrated into everything that we do? My guess is probably not. Certainly not for me, and other people I ask the same question to say the same thing. They're all using it, but we all have habits about how we work and how we integrate this stuff into our lives. And one of the things I did some research on this, and I've seen other similar research, is unfortunately, 55% of the companies who are deploying AI applications had done zero training with their employees, which means they're just throwing this stuff out there and seeing what sticks, and people are not getting it. So until we start to really figure out how to do this stuff like Dan talked about, right? How do we really make this work? How do we make it part of our lives? This is gonna take a while before that happens. It's a multi-year process.
Oh, well, and we're taking it as a given that we want that it is a good thing.
Well, exactly. And the other thing is, some of the things that it's going to do are things that maybe we don't want to worry about anymore. Or and I give the example all the time. In the early chatbot days, it's like, you can plan your vacation somewhere using one of these tools. It's like, okay, great. And for a lot of people, only vacation once, maybe twice a year. Like, okay, now what do I do the rest of the time? Like, there's certain things, yes, it's great for, but they're a small part of what you do. And and the S1 filing example. I mean, yes, that's an important thing that they have to do, but there's a lot of other things they have to do, right? So all of these companies, I think, are trying to figure out how this stuff is going to work. And look, to be clear, there are questions, right? Yeah. There are absolutely questions of how far can we go with this? What can we do? But I think we're going to see these things evolve. I think we're also going to see the models evolve to a more hybrid AI type of thing where we've got some in the cloud, some in the business, some on the client devices. All of that's starting to happen too, simultaneously, just multiple interacting waves.
Right. Julie, you actually pointed out something really important. Just yesterday, I looked at a poll, and it showed between all the generations that are active in the workforce, it's something in the 60s to the high 70% that people do not want to see AI rolled out too quickly. They actually, and so to your point though, is that society's desire versus kind of the tech industry and the world's understanding of how critical this is somewhat diametrically opposed right now. People actually want this to kind of come at them more slowly, but the economic opportunity is so big in the race. This is a genuine arms race between nations and big tech.
Let me ask you, Bob, if we were here, last time they reported, one big thing was DeepSeek, right? We were talking about, and that was one big reason the stock struggled to start the year, and Nvidia's executives addressed that issue. Is that totally in the rearview mirror now? Or if you're invested in Nvidia, should you be expecting, hey, there could be other DeepSeeks coming?
I think I think it's basically mostly in the rearview mirror, because I think what we learned from DeepSeek is a few other things. First of all, it turned out that they were actually using a little bit more compute than they initially acknowledged. So that's number one. Number two, it was about the open source nature of what they did. People learned from that. They were able to take things further. So I think that, look, there are going to be bumps along the way. There's no question. And again, we haven't even talked about the fact that how do we really monetize this stuff? I mean, yes, there is the $20 a month ChatGPT thing, but how long does that really work? And how many companies can get away with that model? On the flip side, there's an entire ecosystem of companies who are now being built up and growing thanks to all this AI infrastructure. People who make, little clock chips that run on NVIDIA's boards, like a SiTime. People who make the HBM memory on, these boards, like, Micron and a Hynix and those guys. All the other companies who are now able to sell these systems, into enterprises. All of these kinds of things are evolving. So you get a lot of these benefits from what NVIDIA is doing, and then there's still, however, that question of how do I monetize these enormous investments?
Right. We're going to pause and go back to the call, which should be winding up pretty soon, but let's listen in to see what they're talking about.
But we're considering it. We're thinking about it. Obviously, the limits are quite stringent at the moment. And we have nothing to announce today. And when the time comes, we'll engage the administration and discuss that.
Your final question comes from the line of Aaron Rakers with Wells Fargo. Your line is open.
Hi, this is Jake on for Aaron. Thanks for taking the question and congrats on the great quarter. I was wondering if you could give some additional color around the strength you saw within the networking business, particularly around the adoption of your Ethernet solutions at CSPs, as well as any change you're seeing in network attach rates.
Yeah, thank you for that. We now have 3 networking platforms, maybe 4. The first one is the scale up platform to turn a computer into a much larger computer. Scaling up is incredibly hard to do. Scaling out is easier to do, but scaling up is hard to do. And that platform is called NVLink. And NVLink comes with it chips and switches and NVLink spines, and it's really complicated. But anyways, that's our new platform, scale up platform. In addition to InfiniBand, we also have Spectrum-X. We've been fairly consistent that Ethernet was designed for a lot of traffic that are independent. But in the case of AI, you have a lot of computers working together. And the traffic of AI is insanely bursty. Latency matters a lot because the AI is thinking and it wants to get work done as quickly as possible. And you got a whole bunch of nodes working together. And so we enhanced Ethernet, added capabilities like extremely low latency, congestion control, adaptive routing, the type of technologies that were available only in InfiniBand to Ethernet. And as a result, we improved the utilization of Ethernet in these clusters. These clusters are gigantic, from as low as 50% to as high as 85%, 90%. And so the difference is if you had a cluster that's $10 billion and you improved its effectiveness by 40%, that's worth $4 billion. It's incredible. And so Spectrum-X has been really, quite frankly, a home run. And this last quarter, as we said in the prepared remarks, we added 2 very significant CSPs to the Spectrum-X adoption. And then the last one is Bluefield, which is our control plane. And so in those 4, the control plane of the network, which is used for storage, it's used for security, and for many of these clusters that want to achieve isolation among its users, multi-tenant clusters, and still be able to use and have extremely high performance, bare metal performance. Bluefield is ideal for that and is used in a lot of these cases. And so we have these four networking platforms. They're all growing, and we're doing really well. I'm very proud of the team.
Jensen, over to you.
That is all the time we have for questions.
Okay.
Jensen, I will.
And that's a wrap on NVIDIA's earnings call. NVIDIA is sharing in the call the China impacts due to changes in export controls. For the second quarter, the chipmaker expecting a loss in H20 revenue of approximately $8 billion. But Jensen just saying at the conclusion of the call that while they are thinking about developing an alternative product to be able to sell into the Chinese market, they don't have anything that they wanted to announce today. To discuss more on what this all means for NVIDIA, let's get to CFRA Research Senior Equity Analyst Angelo Zeno. Angelo, congrats. You made it through the call. So did we. So what do you make of NVIDIA and particularly the China situation?
Yeah, I mean, I think overall you've got to be pretty optimistic where NVIDIA is sitting right now. I mean, the guidance, I mean, the results in itself are perfectly fine, solid results. The guidance, when you kind of try to dissect it, I mean, you alluded to the $8 billion in lost revenue there from China, which essentially indicates that the non-China business is running well ahead of expectations, because most of us we're looking at about a $4 to $5 billion hit for the July quarter tied to China. So the fact that you're likely running a couple of billion ahead of expectations in China. As far as China itself is concerned, listen, I think what you're getting here now is almost a de-risking of China in the fact that, hey, listen, you would have been potentially $8 billion above the current run rate, but the fact of the matter is, you now don't necessarily need to worry about another leg down driven by China. And in fact, if we were to see some sort of good news, and we don't think Nvidia is going and Jensen is going to give up on China, so we would expect them to at some point find their way back into China. Once they do, that is a potential catalyst for the shares.
Angelo, I know you got a buy on this name, but when you're talking to your clients and they ask you, hey, what are the key risks I need to think about before committing capital to NVIDIA? You tell them what, Angelo?
Yeah, I mean, there's a lot of risks that are still on the table. I mean, I'd say right now, there are still geopolitical risks that you still need to take into account, tariff-oriented risks. I mean, we do have a pending 232 semiconductor investigation that is going on at this point, where we expect to get some clarity on it here over the next couple of weeks or months. Once we get further information on that, there is going to be a tariff, right, on technology products out there, on the hardware side of things. NVIDIA largely now is hardware oriented in nature. We think they're going to be able to obviously pass through a lot of those costs, but nonetheless, it is a potential headwind that's looming out there at some point in time. But still, we need to find out, get some clarity on that side of things. I'd say the other thing, when we look out here over the next couple of quarters or years, the trajectory of AI demand, I think was more of a concern maybe 2 months ago, but nonetheless, we're seeing a lot of supply growth in terms of extra compute capacity getting added into the market, not only from the hyperscalers, but from these tier 2, 3 providers, whether it be the CoreWeaves, the Stargates of the world. And if we would get to a point where that supply growth exceeds the demand growth, that clearly becomes worrisome for the AI trade. But I don't think that's something you necessarily have to worry about here clearly over the next couple of quarters, especially given what Jensen just talked about in terms of the emergence of these reasoning models, what they're doing with AI agents and the demand that's providing for compute here.
So one of the questions I have is in terms of some of these other areas that you just were referring to, to counter Josh's question, what are some of the positive things that you're telling people who are calling you that you're seeing? You referred to some of those things, but what are the other growth areas? Like one of the things we were talking about earlier is the fact that, we're really not seeing anything on the robotics side just yet from a revenue perspective. I think there's some other opportunities out there. Any other things like that you're seeing that you think are positives?
Yeah, so I think when it comes to AI, you've got to walk before you can run, right? I mean, you look at 2023, 2024; those were kind of the years of Gen AI. You've now got this inflection here in 2025, which we think will spill into 2026, which is kind of this shift towards AI agents, more complex reasoning models. And I think 2027, 2028 will be the bigger opportunity and massive wave in terms of the physical AI world. So you'll probably see some signs of that obviously here over the next year or two. But the greater momentum we think is probably 3 to 5 years away in time. But nonetheless, there are clearly catalysts, towards the growth of compute out there. I'd say also think about sovereign AI more and more nowadays, especially after the Saudi Arabia deal that we just saw. I think you're going to see a lot more deal making here over the next couple of quarters, and I wouldn't necessarily, be surprised if you saw more Nvidia, in some of these deals that get announced out there in terms of being used as a bargaining chip, and that's clearly going to be a potential catalyst for a company like Nvidia and the broader AI ecosystem.
Angela, taking a step back here, the question and concerns, leaving China aside for a moment, the concerns were that Nvidia had seen peak revenue growth. There's nothing to change that thesis, right? The company at its peak saw 265% year-over-year revenue growth. Those days are gone. We're in double-digit territory now, and that double digit is only going to decelerate over time. Is that still the case? And if that's the case, what kind of growth can we expect from the stock going forward?
So it's a great question. I'd say, yes, you're going to see more deceleration, especially on a sequential basis. I think you only saw a sequential growth of about 10% this quarter or so. It's going to actually, you're looking closer to low single digit here for the July quarter on a sequential basis. Clearly the China issue is what they've got to digest here before I actually think you do start seeing a reacceleration later this year. But maybe to your point, in terms of the growth rates, I don't think anyone can expect anything along the lines of what we've seen here over the last 2 years. I think that's perfectly okay, because when you look at Nvidia's multiple today relative to what we've seen here in recent memory, it's nowhere near the levels that we've seen. It's trading about 24 times our calendar 26 estimate. So you kind of look at a mid-20s multiple, you look at that free cash flow generation, which now actually helps the thesis in terms of the multiple, whereas you might not be getting the growth, but you are getting the free cash flow generation, and you're going to see more of that being returned back to shareholders. But I think the combination of whether valuation is as well as that free cash flow generation, not to mention, they did reconfirm the fact that they are going to see, or they are looking to expand the margins here as we progress here through the second half of the calendar year. And I think that's a really important point, because there was maybe some concern out there that maybe they wouldn't be able to do that to the degree that they previously alluded to, and they will. And then maybe, in terms of the long-term trajectory, we think this is a company that should be able to grow the top line, at about a 15 to 20% basis on a consistent basis, as things start to level off. But it's going to be lumpy, right? There are going to be cycles here and there. Blackwell is going to be a huge cycle. The B300, Blackwell Ultra, maybe Rubin Ultra isn't going to be anywhere near what we saw with Blackwell. But then when we start looking towards 2027, we get really excited about Rubin Ultra, because there is a change in architecture there. So I think it's going to be lumpy in terms of the growth rates out there. But I think you can pin a 15 to 20% growth rate at the very least. I think that's on the lower end side of things here over the next 3 to 5 years.
Angelo, always good to see you on the show. Thank you, sir.
All right, thanks for having me.
Nvidia shares rising after reporting a revenue beat for the first quarter, but how does the stock perform historically post-earnings? Yahoo Finance's Jared Blickry joining us now with the details.
Thank you, Josh. Let's take a look at what is happening right now. The background color is what each of these semiconductor stocks have returned year to date. Nvidia just barely positive, up 0.4%, but you can see the earnings reaction. It is up 4.4%. Now, this is a year-to-date chart, and I just want to show we've been consolidating the last 2 weeks. This would be a breakout, and if we open here tomorrow, might trigger some more buying. So this would be the highest since basically the end of February. We'll have to see how this goes into the close tomorrow. But let's take a look at what has happened with Nvidia stock after earnings announcements going back 10 years. And each of these columns represents a different time period. 1 day after, 1 week, 1 month, 1 quarter, 1 year. What you notice is up to 1 month, 1 day, 1 week, 1 month, doesn't really capture that many gains. And in fact, the percentage positive, you can see right here, 60, 65, 58%. For a stock that goes up so much of the time, that's actually pretty anemic. Things get interesting, however, when we get to the quarter time period. 3 months after, the median return is 17.5%, 74% wins, but the real gains come for long-term holdings. And for that 1 year. 1 year holding 83% positive, 117% median gains over the last 10 years. Now, let's dial in over the last 2.5 years, and this basically covers the bull market that began in October of 2022. First column is options implied volatility. That is a fancy term for what the options market, options traders think the volatility is going to be in the stock the day after earnings. So that doesn't imply direction. It could be up or down, but 7.4%. Now, this next column is what has actually happened over the prior 2.5 years, 11.6%. So this means that options traders actually think we're going to have a little bit less volatility than we have gotten over the last 2.5 years. Finally, this third column here, this is the average daily movement on non-earnings days. So 4.5% is what Nvidia does any day of the week, except for those earnings days, which happens 4 times a year. And what you can see, that's actually about 1/2 to 1/3 of these other two numbers. So earnings is definitely a market mover for Nvidia. I want to move on now and show you the 1 year holding time. And this chart goes all the way back to the beginning, 1999, 2000. And if you were to hold 1 year after all of these, each of these earnings announcements, and we have blended these, I use a 10-period rolling average here, but you can see we've gone negative a few times. So this wasn't necessarily the best strategy 15, 20 years ago, but for the most part, since 2015, and that's right here, you can see we've had some really nice gains, and holding for 1 year hasn't gone negative just yet. Finally, I want to show you just kind of the distribution of the earnings reports. This goes back to the basically to 4 years, so July, May of 2021. And what I want to show you here is the returns, because these are varied. You'll see some big ones, you'll see some small ones, but for the most part, we're seeing kind of a deceleration in the trend. So here is the biggest one that we've seen. This was a $250 billion day for Nvidia when the stock was up 25% the day after announcement. But we have kind of trended down since then. And if we were to hold on to these 5% gains into the close tomorrow, we would be somewhere around here. So I think the bottom line is you want to be probably a longer term holder and maybe not expect the huge gains that we've seen from the belly of the AI trade, which was probably a year, 2 years ago. Back to you guys.
Hopefully, Jared, most people who are in it got in a year or two ago. I'm hoping for them because they did quite well as a result, obviously. After hours, we are still seeing Nvidia hold on to a gain of 4%. We will see, obviously, how that evolves over the next 24 hours as we get the regular session tomorrow and people take another look and start pouring through all of the analyst research about all of this. I want to thank Dan Newman and Bob O'Donnell for hanging out patiently through the call here today and giving us the reaction. Josh and I will be back tomorrow.
We sure will.
With our regularly scheduled programming. That's a wrap on Yahoo Finance's special coverage of Nvidia's first quarter earnings. Tune into the morning brief tomorrow morning at 9 a.m. to stay up to date with all the latest market coverage. They will have more Nvidia. Don't you worry. Have a great night.